Good day to all of you on this Saturday morning. Hope that you are well. Okay, so today, not so much going to look at the charts, just put that up for pretty pictures. We're going to talk about what went on this week in the news of crypto and what it looks like for the space going forward. Something slightly different, do it usually weekly. Okay, so we're going to start off first of all with something fairly light-hearted. We're going to talk about NFTs. Now, this is something that I haven't really been too involved in, and look, I know it's been booming and going absolutely nuts. Don't get me wrong, it has been a wild ride for digital art creators. Of course, one item selling for $69 million. I think it was just this week, actually, which is mind-boggling for me. Now, for me, NFTs really remind me of when I was in New York, and the Crypto Kitties phase was going on. And it turned out that it was a bit of a phase. Now, I'm sure those Crypto Kitties, being the first or some of the first NFTs or non-fungible tokens, are probably worth a pretty penny today during the second craze of this market. But what I find quite interesting is, are we going to see, this continue on? Digital art. Look, I understand the concept for it. I understand why there is value to it. But it is getting a little bit crazy. And it feels as though it might have that sting in it where if you don't buy the right thing, you might be wildly overpaying for it. Now, I did see a statistic as well that the art piece that sold for 69 million was above a number of Picassos. And I can understand a Picasso, for example. There's one of them, it's painted, it's in your possession, so it's yours. This particular item that you see here, I'm not sure if this might have been the one that went for 69 million. I don't really know, I can't remember. But as you can see, it's right here. It's right here and it's right everywhere. Sure, this person doesn't own this picture, but the picture is there for all of us to see. It's not anything, and I mean, I suppose you could very similarly say the same for a Picasso. The images of it are all around the world. So in that respect, there's not too much grounds for any sort of concern as far as the comparatives of ownership and whatnot. What this article is talking about is some issues around copyright infringement, that sort of thing, but also the ability for non-fungible tokens to help artists to grow and to do better, to have more forms of income, which I think is really great. My whole point about NFTs right now is this. If you don't know what you're doing, be very, very careful, because it does have, it's a niche within the digital asset space. All right. It's a niche within the digital asset space, and it just doesn't, I don't know. It doesn't feel like it's going to hold. Is that piece of digital art that sold for $69 million going to remain worth $69 million? I don't know. I do not know. Who spent $69 million on a piece of art? Well, I'll tell you who might have a good go at it. Maybe one of the exchanges, because it puts media all over it, all around the world. I don't know. Music. I agree with you there. Music being a very good case for NFTs. The art side of it, I just want you to be very careful. It's definitely going berserk right now. And usually when things go berserk and they're really hot, they can fizzle out. Not to say they will, but just be careful with that. Okay. On to some actual news when it comes to central banks and the greater picture of our digital asset space. The European Central Bank has come out and said, well, we can't let Zuckerberg become a central bank. And I, for one, am with them. All right, I am with them. The thing is, when it comes to the European Central Bank, what they're also saying here is they may be pushing to regulate cryptocurrencies more. Now, I don't have a major issue with further regulation of digital assets, okay? It's already requiring us to have KYC and all these things at the moment. It's a no-no, okay? So regulation coming into the space does help it with legitimacy, does help it with bringing other big players on board. However, whatever they're doing at the moment seems to be okay because there are already a lot of very big players coming on board here. Now, essentially what this article is talking about is saying, they don't want Facebook to have its own currency, so to speak, to take over the role of central banks setting rates and all these things that central banks go ahead and do. Because it would really throw a spanner in the works. If you've got one banking system here or one financial system here, excuse me, and a Facebook type financial system here, I can see the issue. And this is the reason that a lot of central banks have had issues with digital currencies for the exact same reason. The thing is that with Bitcoin, for an example, it's not owned by anyone. It is owned by all of us. Zuckerberg becoming a central bank? Don't know about that one. He's not got the best record when it comes to trust and safety. Next, looking at Etoro CEO, speculating on what's driving the crypto bull market. And he's quite right down here, talking about the fact that at the moment in global financial markets, we have record low interest rates and some negative rates as well around the world. A lot of stimulus being pumped into the markets, which we'll cover in just a second. And of course, there's a lot more talk about digital assets at the moment. One of the things that I don't see in this article that I'd like to add, my own take on this, is that with interest rates being so low, it's great for borrowing money. Debt markets are cheap. So, property is probably good. It's going up in value because money is cheap and it's easy to get more of it, and that therefore drives prices. The other thing I think that's very interesting to look at is just how little you get for your dollar in the bank anymore. Interest rates being so low and continually being lowered means that deposited money is really dead money. It's not even holding inflation in many cases around the world. So people are looking for homes for their money, and they don't even need to have massive yield just to outperform the bank. What this is doing is bringing more capital into markets, driving stock markets, driving digital assets, and driving property. Now, this looks good, especially if you're in the markets that are going up. But what long-term effect will these long-term low interest rates and stimulus have? Well, that's yet to be decided. If we see further growth in stocks, equities, and cryptocurrency, well, the fall will be quite brutal, and you need to be aware of it. So there you go. That's what's going on there. Another one from a big player, Deutsche Bank. Deutsche Bank is now saying that Bitcoin is now too important to ignore. And I like the sound of that. Now, what they're looking at here is them coming into this space. All right. So here we go. The real debate is whether rising valuations alone can be reason enough for Bitcoin to evolve into an asset class, or whether its illiquidity is an obstacle. Now, I think they're missing something here. Bitcoin is already an asset class. Cryptocurrency is already an asset class. It has proven itself over a decade. It is still there, and it will continue to be there. It is not going anywhere. All right. So I think they're going to, come back and reconsider that comment quite soon. Bitcoin is expected to remain ultra volatile in the short term, Deutsche Bank analysts concluded, forecasting a turning point for Bitcoin in the next 2 or 3 years as a consensus about its future may emerge. And that very well may be the case. But you try and look ahead 3 years in such a very, very wild world that we have right now, especially with digital assets, and I think you'll find it very, very difficult to have anything in the way of an accurate take on the matter. But again, Deutsche Bank in there talking about Bitcoin. And finally, we come and rest at Mickey with the stimulus in the US. Of course, $1.4 trillion or $1,400 per person is going to be hitting the bank accounts of Americans in the not too distant future. They did a little survey. A little survey was done, and they spoke to ultimately a very small sample set. 235 people with a family income of $150,000 or less. Now, out of those 235 people, 200 said they expect to get a third round of stimulus checks, so they thought there's more to come. What was the one I'm looking for? Where'd that little line go? I've lost my little line. So, oh, here we go. Almost 2 out of 5 payment recipients plan to allocate some portion of their money to invest, and stimulus check recipients prefer cryptocurrency over stocks. So, just let's say 2%, or sorry, 2 out of the 5, much more than 2%, do go ahead and put some of their stimulus into the digital asset market. Well, we're going to see a lot of growth from that. I don't know what the date is for this intended rollout. I'm not sure if they know what the date is for this intended rollout. But will we push higher with Bitcoin? I believe we will do so. Do I think this will be the end of it? I don't really know. But there is more money coming into the market, and with Bitcoin and cryptocurrency being a hot topic right now, let's hope it comes into our market, and maybe not NFTs. Into Bitcoin, keep it safe, and hold your Bitcoin. So guys, ultimately there wasn't a huge amount of news this week, and that probably reflects in what's happened this week so far in Bitcoin. It's not done a great deal. Admittedly, there is still nearly 3 full days to go until this weekly candle is to close. It's been a fantastic trading week for us at Trader Cobb with 4 trades, 3 of which have hit 1-to-1, and one of which is on its way at the moment. There's our weekly candle right there on Bitcoin. I wonder if we're going to close at all-time highs. Guys, that is this week in crypto. You have yourself a fantastic weekend. The weather is absolutely horrific here, so it's a great weekend for hitting the markets. Don't forget to visit tradercobb.com. Get yourself up to date with what's going on in crypto. Get yourself the free course there and get yourself up and trading.